Asia is becoming the center for metals trading. Europe, and particularly London and New York, as each day goes by, is becoming less and less of a force. And with that, their ability to bring the market down and keep it down, suppress the market, manipulate it, whatever everybody wants to call, is lessening.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for December 30th, 2024 through January 6th, 2025 while supplies last. This week we feature 2024 1-ounce silver eagles at just $4.85 over spot, one of the lowest premiums we've seen in years. We have a limited supply, so these are first come, first serve. Next, 2024 1/10-ounce gold eagles are just $44.99 over melt per coin. We also have an incredible deal on XF $20 gold Liberty coins at just $75 over melt, one of the lowest premiums on pre-33 gold we've seen in a long time. And finally, 1/10-ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Peter Grandich from Peter Grandich Company. Peter, thank you so much for joining us today.
Well, thank you for having me as we end the most interesting year for the metals and other markets.
It definitely has been an interesting year, almost 30%, 25 to 30% up for both gold and silver here. We saw, the most interesting presidential election of my lifetime. Where would you like to, start with this 2024 recap?
Well, I think the recap, like you said, is one of the things that I've talked about. As much as I think the metals will finish higher by the end of 2025 than where they start, I don't think we should look for the same type of percentage gains. It's not called to be that, and it may not be in the best interest to just go up straight up, because it could set up for a much larger correction or decline than would be necessary. But I do think it's important to understand why. And, it's Monday morning quarterbacking, but it's always easier to be a Monday morning quarterback than a Sunday afternoon quarterback. So it's clear and obvious that the main thing that drove gold higher was central bank buying. And then you have the question then is, well, why were the central banks such aggressive buyers? They're doing it for absolutely a couple key reasons. One is that they recognize that there's too much debt in the world. There's going to be a tremendous restructuring someday. Paper assets, are especially in the U.S., got way overpriced, and therefore gold will serve a very useful purpose. I think that was their first thing. But I think the second thing is, particularly in certain countries, is as much as people, when Trump got elected, all of a sudden everybody said, oh, the BRICS are dead because he said, I'm going to put tariffs. BRICS aren't dead. You'll see that come the fall. They're not going to get into a verbal battle with him right now and all, but he's going to have so much on his plate, Trump, come next fall. I don't think the BRICS are going to be anywhere near the top of his list. But that is the reason also, because those countries and the formation of that recognize that the dollar's days are numbered. Yes, it's still the best of the worst of the currencies at the moment, but the fact of its usage continues to drop worldwide, and all the other issues they're going to face, that minimally these countries are going to set up some sort of trading system within themselves and use gold in some form to give confidence to what will be a new currency or some sort of system that they will use. I don't think they fully have made up their mind yet. They bounced around with it. But I think that's the reason. And so while I continue to expect central banks to be buyers, I don't expect them to be as aggressive as they were. And in order to propel us to the 3,000 number, which I still think is a very viable number in 2025, we're going to have to start to see some real mainstream interest come in. Because remember, we rose in 2024 with liquidating of exchange-traded funds and other things related to gold and all. And one of the main reasons for that was, and particularly in the junior mining sector, the cryptos were eating their lunch. And the crypto market has sent, there's so much money being lost. People hear about one or two that are going up. They don't know how many fail and get lost at. But the crypto market in general, I think, is way overvalued. I think this will be the year that they come back to Earth. If not back to Earth, certainly back into the orbit of Earth. And that'll help money go towards the metals. And that's what silver is going to need, Elijah. Now, people get mad, and they're going to get mad when they hear me say this again, because I said it for 25 years, even when I was bullish on gold. And the silver bugs at a conference came up to me as soon as I was done, and he told me 1,000 reasons why I was wrong. But silver remains still like kissing your sister. It hasn't been able to separate itself from the chains that have kept it down. Now, you can talk about manipulation. You can talk about all the stuff. You can talk about a much better fundamental story for it. But until silver can get above $35 or $36 and stay there for more than an hour a day or a week, it's mirrored in this, the talk about it is a lot higher than the reality of it. And so I still think silver will still be second choice among metal investors. But I think as gold, which could start off the beginning of the year, particularly if he is going to go through with all this tariff stuff and everything, may see a little weakness. But I think as we get into the second half of the year, both silver and gold should overcome. Gold should overcome its high of this year, and silver should finally get above 35, 36 and really start to take hold. And maybe even as we get into that next year, even start to lead gold for a while.
It seems like we've continually had a higher and higher low for gold, right? Kind of a level. It seemed to be like 2000 for a little while, where it would go to that level and then, it would bounce right back up. And that level has continually increased. And it seems to be that maybe the reason for that is central bank buying, as you mentioned. That probably will not let up. But you're saying that in addition to central bank buying, we're going to see the mainstream, and that's what is really going to make gold eventually hit the $3,000 level. Is that what you're saying?
Yes. And then there's a third, and this is an important thing. It's not spoken a lot outside of the people that make a living in it or day-to-day investing in the metals, but it is an important fact. Asia is becoming the center for metals trading. Europe, and particularly London and New York, as each day goes by, is becoming less and less of a force. And with that, their ability to bring the market down and keep it down, suppress the market, manipulate it, whatever anybody wants to call, is lessening. As you see, we still have these one-day wonders. We see it wasn't too long ago, we had an $80 or $90 down day. But within a few days or no more than a few weeks, we're above where it fell from. That years ago took weeks, months, or years to do. And the reason is that in Asia, the difference is they're serious physical buyers of it, not these paper pushers that existed in London and New York. And I'm not the first to call the COMEX the CRIMEX, and I won't be the last. But the bottom line is they are not going to have the influence on the downside. Now, let me just say this, and this may send your people into a little tizzy, but not to get too concerned about it. There is the possibility, because you made a very good point, we worked for the series of higher lows. There is a possibility that gold could retreat as far back, not saying it is, 2,300 and change, and it would still be in a major uptrend. Now, of course, that would shake everybody up and all, but I don't think it will get that far. I think the worst of the correction is $100 or maybe $150 from where we are now, at worst. Not saying it's happening. The upside still looks minimally 3,000. I just think that because that's a psychological number and all. There's no meaning to it because we've never been there and all. But I think that would be a big number. But one of the things, and you will be one of the people that will be able to tell people right away, if you start to see, wow, just Joe down the street has decided to buy some physical metals. It's not my hardcore, the world is coming to an end crowd. It's the typical person that a couple of years ago was buying a crypto or some corporate bonds and now calling me up to own some gold. And they may also go through the exchange traded funds and go that way as well. But we're going to need that switch in order to get to 3,000. I think it's coming, but we need that part in order to get there.
You mentioned the possibility of it going to 2,300 or so. One of the things that I would say maybe could push it down to that level is if we see, continued weakness in the stock market. We've seen, into the end of the year here, a little bit of downside in the stock market. And we're also hearing that there's a lot of insiders selling. So Warren Buffett having his largest cash position he's ever had, it sounds like. And a lot of these other mega investors selling large portions of their stock portfolio. Your perspective on that, is this a sign that we could be seeing a crash coming soon?
I don't think, unless there was a crash, I don't think gold gets impacted to the negative side to any degree. But where I do think what's important, and this has been the concern, think about this, as you know, just before Thanksgiving, we normally enter what I like to call the say no to bah humbug season, where the people on Wall Street don't even dare allow anybody to talk negatively between Thanksgiving and New Year. And then, of course, when we get to Christmas, we get the Santa Claus rally fable. Well, we actually went down during the bah humbug season. And then we started the Christmas and we were down 300 and something on Friday. And as I speak at the close Monday, not too far from the close, we started the record. We were off a few hundred points again in the Dow. So now the Santa Claus rally is in trouble. So the only thing left is the excitement right after the election that, I call it the coronation that some are viewing it on Wall Street if Trump is left. The thing that will take the stock market down is Trump having issues, not getting out of the gate right, and issues suddenly doesn't look like there's going to be a lot of change right away. But the bond market, this is something that people aren't talking about. I shouldn't say that. There's some of the great hedge funds guys are. And that's why they're actually short the bond market. If you think about this, how many of us would have said, be honest with ourselves, that if the Fed cut interest rates by 100 basis points over a couple months' time, we would have said interest rates would have went up 100 basis points, not down 100 basis points. Fed cuts interest rates go down. Didn't happen. Key factor. And what's really interesting, if you look at especially treasuries, we're now in about the third or fourth year of bear market. We had a 40-year bull market in bonds from the day I entered in the early 80s, even before I entered the brokerage business. Bonds, interest rates are 20%. We already went down all the way to 1 or 2%. That's where gold could be soft in the beginning of the year, and here's how. If we start moving in earnest towards 5% on the 10-year, the dollar is likely to strengthen on that, especially in the interest rate differential where Canada and other leading countries are cutting rates and all. And that strength in the dollar could be reasons to some people want to liquidate gold or the shorts get more ammunition to play. That's the only way that I see gold coming down 10% or more in 2025. And it wouldn't be for a long period of time. That's what we lean in. I don't think a stock market, now if the market crashed 5,000 points, people liquidate everything. But I don't think that's the case. But I do think this, the giddiness, the complacency, the overvaluations of U.S. equities compared to everywhere around the world, even the comparison to small caps or value stocks compared to these thin amount of stocks that have been leading the market are all dangerous signs. And I think we don't need a big decline. I think if the stock market just went sideways, that's bad for some people, Elijah. And here's why. 7 to 8 out of 10 families that I still see in our planning group, from day-to-day workers still up to people with businesses and multimillionaires, they're living one lifestyle at least above where their finances are. And one of the things that's helped support that is continuous gains in the stock market, unusually high gains. And they've gotten accustomed to that. In fact, if you say to people now, I think the market will go up 3 or 5%, 3 or 5%, that's nothing because they've been used to double digit. But they're living a lifestyle that needs that double digit. So it's not so much that the market goes down a lot. It's if the market just doesn't go up a lot, could change things and radically make differences in markets. And these are things that I will just tell you. And this, I get nasty emails from young financial advisors, and you must have been young at one time, they would write, but this is the truth. Almost half of all licensed financial advisors now weren't born when I started in the business. And the reason I bring that up is not to tout my own wares, but to say that experience is always critical no matter what you're doing. And a lot of people giving advice now have basically been in a market that basically went one way, Elijah. It never went two ways. It might have got disrupted from going up for a while, but it never went down and stayed down. Forget even about going further down, just stay down. And it's really given a sense of invincibility, or that that's always how it's going to be. And their clients are also being groomed that way, or thinking that way too. And that's why I say it's not so much as the market falls, it's if it doesn't go out up a lot, that in itself can put pressure on the market.
It is interesting, the environment that people have been accustomed to, where you're saying maybe the upper middle class is really accustomed to these double-digit gains in the stock market. At the same time, you're seeing Main Street being really, just the middle class being really hurt, living paycheck to paycheck, just because prices haven't gone down, right? We saw this big amount of inflation, 2023-ish, and we've seen prices officially maybe stabilize a bit. But your take on inflation then coming in 2025, it seems like the fundamental issues with the national debt and these issues that really caused the inflation to begin with haven't been solved. Do you think that we could see another round of inflation coming soon?
So I'm in the camp, and I'll get back to the inflation in a moment. Remind me in case I forget it. But there's three factors that have me most concerned about. I just wrote about it in our New Year report and all. The first is, and all these three, I don't believe Trump can overcome. As I said in my report, we're going to need divine intervention to fix these three issues. The first is the continuing debt spiral. We are just spiraling out of control on debt, not just on the national level, which we now know is $36 trillion, but on state and local levels, corporate debt, consumer debt, and there's no sign of any austerity or to bring that into control. In fact, I think an argument can be made that we may see spending even ramp up through the Trump administration for certain things and all. Second, retirement crisis. Bring this up again. 2/3 of Americans are working paycheck to paycheck. They're never going to be able to reach those beautiful ads we see about how you come to us and we make you live happily ever after playing golf and sitting at a pool or whatever for the rest of your natural life. And it is getting worse by the minute. It is putting 1 out of 2 Americans, the bottom 50% of earners, 50% of them, or 25% of the entire workforce now, is using credit cards just to pay for day-to-day necessities. That cannot continue. You can just see the reports of the credit debt defaulting on cards. Car payments now is just ballooning up. The bulk of Americans are struggling or falling. They're not moving up. There is that class, and Wall Street only deals with them, so they think in that bubble, that's how the world is, but the real world isn't that way. The third one is what's no one's speaking about now, Elijah, but I hope you people mark this down, because I think in the next 12 to 24 months we will. And that's the crumbling of infrastructure in the United States. Whether it's roads, bridges, power, ability to move power, all of that. And the cost, the astronomical cost. Give you an example. Just here in New Jersey over the past few days, we've had 10 major water main breaks in key cities. Streets collapse, businesses can't work and all. The typical water pipe in New Jersey is 75 years old. Many of the bridges in the state of New Jersey were built for 5 times the amount of traffic go over them than any engineer when they first built that bridge years ago could have imagined would go through that. This is existing throughout most of the United States. The infrastructure problem. And what pees me off about this, I hope you don't mind me saying it that way, the original quantitative easing, when Obama announced out of the last financing with Bernanke, go back, read the news, was based on the fact that that money was going to go into fixing the infrastructure problem, which was already acute back then. money never got there, stayed on Wall Street, never made it to Main Street, and certainly didn't make it into the infrastructure needs. So here you on one hand, you got this Wall Street talking about, AI and the need for this and that and power and all. I like to joke, half of the power installations in some places, in some states, Thomas Edison installed them. I mean, it's very, very old and antiquated. And there's not any money to go towards that. So it's great. I understand why people got excited on the Trump win after the 4 years that we went through and all. But there are critical issues here, like I said, that without divine intervention, we are not getting away from them, and people are not prepared for them. So that arc that I spoke about in 2024 still needs to be built. And yet, people are delaying yet again because, they think the sun has come out again and the rain clouds have gone away.
I think it's so important to build that financial arc, and that's really what our channel is for, to be aware and prepared, right? So what are some of the first steps? I know that you we'll put a link in the description of this video, but you have 10 golden rules for financial planning. So maybe we can, if you had some that highlight the need for a financial arc, if you wanted to go over a couple of those, we'll also put in the description your 2025 outlook, the post that you put there as well.
Well, thank you very much. Well, the first thing, which is the first one almost a lot of people can't get past, and that is you have to first decide, does God own everything or not? And if you struggle with that, then it's going to be harder to do the things that I speak about in the planning. But if you get by that, the second thing is the model that I've incorporated for over 20 years, but I live it every day myself, and that less is more. You have to spend less than you make. It's a very simple process. It's not what a lot of people do, but it's very, very important. It's economics 101. The second thing is, while debt is useful at times, remember, if you go back to what we originally said, that we built our financial planning based on biblical principles, there's not a positive verse about debt in Scripture. In fact, there's nothing but warnings about it. And we become a debt-laden society on every level. And I just think the less you have of it and working towards getting free of it, not only comes financial rewards, but a physical and mental relief that people that tell me that when they've done it, and I did it 20-something years ago, it's just a phenomenal. And then I think the other thing that's really, really important is to understand is it's not going to be how much you make, but how much you don't lose, which is going to separate the winners from the losers now. And the reason I say that is I think the big switch now for investing versus maybe the last 30 or almost 40 years, up until a couple of years ago, capital appreciation was an important thing in financial planning. There were a lot of opportunities to make money. It was good to take those chances. But now I think it's capital preservation. I think that's got to be more of an important focus. Not so much of what you can make, but how much you can't afford to lose. And the reason I say that is because the boomer generation is gotten quite old. I'm one of them. And that's where has most of the wealth. They will not have the time or the mental stability to make up for any substantial losses that could occur now. So I think we need to focus on protecting our principal or preserving our purchasing power and all. And that's where gold comes in. And people can argue all they want, and all the crypto people can say, oh, it's a relic and all this stuff. But somehow for a couple of thousand years of preserved wealth, and I haven't seen any reason yet to suggest that it's not going to do it for at least the next 10 or 20 years. But I think those are some of the important things now that financial planning should incorporate. And lastly, but most important for us, the key to successful financial planning is cash flow, not chasing net worth. Show me a successful business. I'll show you somebody that properly managed their cash flow.
Fantastic. And if our viewers are interested in learning more, like I said, I'll put the links in the description there. Also to petergrandich.com. They can go and also find you on X as well.
Yes, most of my day-to-day, intraday comments are done on my X page. There is a YouTube channel where I put up interviews like yours that you graced me with. And then, of course, the information and the booklets that they can all read for free, including the book online for free, is at petergrandich.com.
Any last thoughts before I let you go regarding, your 2025 outlook?
Well, I've been saying to people that I am well on to the latter stage of this race of mine in my natural life. I don't know how long it will last. I do think it's very, very important for people to understand that if money was the simplest answer for better life, then there'd be never any rich people having all sorts of alcohol or drug or worse yet, taking their own life crisis. less focus on money, more focus on family and faith. And I think we'll more than survive whatever 2025 has to bring.
Fantastic. Well, Happy New Year. Peter, thank you so much for your time, and God bless.
Thank you, my friend. God bless you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for December 30th, 2024 through January 6th, 2025 while supplies last. This week we feature 2024 1-ounce silver eagles at just $4.85 over spot, one of the lowest premiums we've seen in years. We have a limited supply, so these are first come, first serve. Next, 2024 1/10-ounce gold eagles are just $44.99 over melt per coin. We also have an incredible deal on XF $20 gold Liberty coins at just $75 over melt, one of the lowest premiums on pre-33 gold we've seen in a long time. And finally, 1/10-ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.